Hello, everyone. Welcome to our April 22nd edition of This Week in Crypto. I'm your host, Brian. Maxim, our founder, should be here in a bit. We have quite a bit to cover after a volatile week, to say the least. We're coming off of a 24-hour day, as we can see here, and by these constant red bars. A pretty rough 24 hours, but overall, if we switch this to the 1 week cycle, things actually look like not a lot happened. So it's kind of been a tale of two halves of the week where we started off with a bang and kind of began to give up on a lot of those gains the last day or two, which is unfortunate. It's nice to constantly be on the rise, but as you guys know, since the all-time highs back in mid-November, most of the markets have retraced quite a bit here. So we're going to uncover where things look now after over 5 months have now elapsed since those all-time highs, at least for Bitcoin and Ethereum, and touch on a lot of stuff as advertised on our video title and thumbnail today. We're going to touch on stablecoins a little bit, see what whales are doing there. There's been some very interesting behavior that might give us a glimpse as to when this volatile period, some are calling it a bear market. We wouldn't quite go that far, but it's certainly been a volatile period. So we're going to try to figure out exactly when that ends and when the next phase and cycle of crypto begins. We are, of course, a data analytics platform, and our goal on all of these streams is to point to bullish and bearish divergences based on where things have settled historically in the past. Our job is not to give investment advice, so please keep that in mind. And with that said, we can look at a few highlights of the past week. Of course, things have not all been red. There have been several projects that were able to surge over the past week. For starters, Luna got back on track with a plus 18% week. We had a few mild positive returns here with Matic and its native token, PMatic. These were essentially neutral. Tron and Raptron did pretty well. Monero had a nice week as well. ApeCoin continues its run. They've been on quite a tear as of late. Toncoin, Pancake, Zcash. And then the big highlight was GMT, a metaverse token. I'm trying to remember what the full name of it was. If anyone knows, feel free to tell me. I can't remember what that G stands for, but a lot of coins related to the metaverse have been doing quite well lately as hype continues to grow for it. So that's something to keep an eye on as well. But overall, we look at Bitcoin. It's sitting here at about 40.2K. Barely moved in the last week, up 0.7%. Obviously, it fell below 40K earlier this week and jumped above 41. I don't think it ever got above 42, but I'm not positive on that. No, I take it back. It actually was 42 just a little over 24 hours ago. And then Ethereum is actually below 3,000 after spending a lot of the last week or two above it. So as we can see, looking at the social volume, there is one coin here that really stands out, and that is Ethereum. It's jumped about 46% in hype and just overall discussion between this week and last week. And that tells us there are a lot of people paying attention to it right now. Generally, if a coin is on a downswing and you see a big jump in social volume, that's a sign that there's some crowd recognition and a lot of FUD going on. That's not necessarily the case for Ethereum, though, right now. As we can see, it's been essentially flat over the past week. But either way, the volatility has picked up a lot, and that has undoubtedly caused more people to discuss the number 2 asset, crypto, right now. Bitcoin also up 10% on its own, so that's a good sign. We always want to see Bitcoin's social volume and dominance remain relatively high because it means there are people paying attention to the number 1 asset, and more than anything, it means they aren't paying as much attention to the SH coins out there, which can sometimes indicate tops are imminent. So that's it for the data screener. I wanted to go right into a few discoveries that I've had over the past week, especially just in the last few days here. Starting off, this is the chart for the word pump, the amount of mentions of the word pump over the past 3 months or so. The blue bars are the social volume of the word according to platforms including Telegram, Twitter, Discord, Reddit, and a few pro traders chats that we have access to. And then the orange lines are the social dominance, so the overall percentage of discussion related to this word versus all other crypto words. We can see that on April 20th, there was a massive spike, the largest spike in the past 3 months. And just like we usually see with this word, when the word pump starts to get a lot of traction, we end up seeing a correction, right? Because markets tend to go in the direction of least expectation from the crowd. So when the crowd thinks that the markets are about to fall off a cliff, they usually don't and they rebound. E.g., Black Thursday would be a good example of that. And when the crowd all, or at least in a vast majority, believe that the markets are going to pump, that's when they get blindsided and corrections occur. Of course, this isn't a perfect science by any means, but we can see an obvious correlation here. Some of the biggest spikes, maybe, yeah, the top 4 spikes on this chart, 1, 2, 3, and 4, all led to corrections right afterwards. And we actually mentioned this on our Twitter right after it happened. We were seeing this spike in real time, and we didn't want to make any calls because, again, we're not investment advisors. But we did say that historically, prices tend to correct and move the opposite direction when we see words like this spike. So boom, we saw a top here after a few days passed. This one was a perfect top signal right here. This one also was essentially a perfect top signal, maybe a day or two delay before the top hit and then a big correction occurred. And then of course this one here. So this is the kind of thing, yeah.
Maxim will only be in chat today.
Okay, thank you for letting me know. So this is exactly what we want to see when it comes to, future price direction, how the crowd is looking at the markets at any given time. We can also look at the word dump. I haven't checked this out in advance of the call, but of course the opposite will tend to have some interesting results as well. I'm hoping that's true at least. Sort of, kind of. I mean, we had a big spike here that happened after the dump, another one here after the dump, and prices did gradually recover thereafter. Not the best alpha in this case. I would put more merit on the word pump in general. But if you look at something like short, somewhat good alpha when you tend to see these in the same spots as the word dump. Sometimes people get a bit euphoric a bit too much FUD, and that's when prices tend to jump. I think there are probably better words to look at than the word short. I won't try to hunt and find them right now, but there are plenty of bottom signals out here too. You can absolutely compare the word buy versus the word sell. You don't have to only have one word here to look at a time. But social trends is definitely your friends, guys, and I highly recommend exploring some words. And of course, we have the top 10 over here, which aren't really related to crypto other than BTT, of course, which is a top 100 token. Actually, no, I think it may or may not be in the top 100 still. I haven't checked in a while. But that's the sole crypto asset that I see in the top 10 right now. Typically, they will pop up if the coin is pumping. Every once in a while, it might be due to a dump. But usually, if you see a coin, especially a more obscure coin like BTT, enter the top 10, it's because it's on a pump. I don't know if it's pumping or not right now, so please forgive me. But if it happens, that will essentially mean that the crowd has discovered it and there's some FOMO going on, and it means there's a correction that may be upcoming. And then vice versa, if the coin is dumping at an extreme degree, XRP would be a good example. last year when the SEC talk was dominating. That would be a coin where an instance where the coin is seeing a ton of FUD and doubt, and then everyone gets blindsided when XRP recovers and jumps up. So just a little tidbit about social trends that I think is really important to pay attention to. And, we can all go over some more serious examples at another time or on a video that I'll release. All right, next up, let's refresh that because the chart got a little bit squished. I'm going to go back to my template here. Look up Tether. Okay, so we're looking at two different tiers of whale holders right now. One in pink would be the amount of Tether held by addresses holding between 100,000 and $10 million in Tether. 100,000, a lot of people may say, that's not a whale. I would agree with you. However, in terms of alpha, we include that tier because we've seen enough evidence to show that when those addresses pump, the 100,000 to $1 million Tether addresses, really begin to rise in holdings, prices tend to react shortly thereafter. And that goes all the way up to addresses that hold about $10 million in Tether. Once it goes above 10 million, it's a lot of exchange addresses and addresses that don't have active pulses on where prices are going at any given time, and they don't fluctuate in tandem with market prices as well. So looking at that group of tiers, though, 100,000 to 10 million, we see that they hold about 34.3% of the total supply of Tether, just a little over a third of the supply. And we see a promising trend here. After it was as low as 32.7% back on February 3rd, the next 2.5 months here has been a pretty steady rise. If I hold down Shift and I drag my mouse, we can see with that pink line, they have added a total of 1.67% of the Tether supply. And more importantly, this is an addition of 5.13% of the tokens that they had here to here. So they hold 5.13% more Tether than they did 2.5 months ago. It's a pretty significant jump and a promising sign that these whales, people in crypto who have a lot of money in general, are increasing their buying power. And that historically is a good sign for crypto's future. It is certainly not, the sole sign. And to give you a little context about how early it may be to react to this, if I zoom out to a year, you see a lot more dumping, right, in the last year than there was accumulating just in the last couple of months. So relatively speaking, this rise really isn't much compared to just how much less buying power they have now compared to a year ago. So the news is kind of bittersweet. We are moving back in the right direction in terms of whale buying power, but they've got a long way to go to start matching the kind of holdings that they had coming off of the original 2021 all-time high back in mid-April, at least for Bitcoin. But you can see, they started dumping right in tandem with the big drop. That wasn't a coincidence, especially because the yellow line, which we'll get to in just a moment, that was also dumping at the same time. So that wasn't a good sign. But, if we start to see a huge rise like we did from June 21st all the way up to a peak of what looks like August 9th, so about a month and a half, they added about 6% of the Tether supply. And we can see what happened to price, those green bars here. They really reacted, and they reacted well after the accumulation began, which indicates that this was some good alpha and gives you some ample time to react to the accumulation trend. And vice versa here, if you see a big decrease in buying power right here, this happened about a week before the true all-time high in mid-November. That would be something to look out for and say, whales are dumping a lot of Tether right now, and they're dumping a lot of Bitcoin, which again, I'll get to in just a moment. That's probably not a great sign that these all-time high levels can last. And certainly, the dump indeed happened shortly after these two dumps began to happen in unison. So now moving on to the yellow line here, this is including the whales holding between 100 to 10,000 Bitcoin. And we look at this tier because indeed they're all whales. These are all millionaire addresses. 100 Bitcoin right now would equal more or less a little over $4 million in Bitcoin. And that goes all the way up to addresses that hold about $400 million in Bitcoin. And yes, many toward that top end are exchange addresses for those of you who are having that thought. However, many in the 1,000 to 10,000 Bitcoin range are not Bitcoin exchange addresses and still react quite heavily to whatever market prices are doing at any given time. Certainly anything above $400 million, which there are still plenty of Bitcoin addresses that do qualify for this region. Those are mostly exchange addresses. And so we try not to include the 10,000 plus tier due to the lack of alpha that they provide. But regardless, so 100 to 10,000 is something we've seen plenty of evidence of leading the markets and having a kickstart on where prices move next if you're watching their fluctuations in real time. And we can see it pretty clearly here. Like I said, they started to dump in mid to late April. Prices did begin to top out. If I zoom back to 2 years here, we can see it a little more clearly. So April was here. They started dumping on April 6th or so. That was their peak. And about a week after is when we saw that then all-time high started dumping here. Once the big drop in price happened, you can see they started accumulating right here. So especially when we see a divergence moving in the opposite direction, right? The short-term price movement upwards while whales move down, that's a clear bearish divergence on the whale side. And then as they start accumulating, as prices continue to go down, this would be a juicy time to really be accumulating yourself, because once prices turn, they tend to turn big or tend to turn down big, depending on whether the whales are moving in the opposite direction. This happens sometimes. Sorry, guys. I will just close that and that to make sure that doesn't pop up again. So long story short, now we'll zoom in and look at just like the last 3 months here and see what's been going on. It hasn't been a pretty sight for the Bitcoin whales for quite some time. I'll do 6 months because the dump really started in October here. Right around here is when the accumulation cycle ended and they began to start getting rid of their Bitcoin gradually. And just like in April, right, we had that bearish divergence where the price moved up as whales were moving down, topped up. It actually went above 68K. I don't remember the exact number that the all-time high was, and then really began to retrace in a hurry. The whales had already gotten a head start and dumped. They actually started accumulating briefly here, and then it's been mostly a big dump fest ever since. And yes, we've had our share of, accumulations that have happened. If you saw this rise begin here, you could have gotten in for a nice mini bounce. This is not going to be always the case with whales. They don't lead prices in this short of a time interval. Typically, it's more of a macro indicator than anything. However, if you're watching these whales overall, you should be a bit concerned with the fact that they really haven't shown serious signs of accumulation since mid to late October. So we're at about a 6-month mark now of their dump cycle continuing. That said, the tether supply is starting to incrementally go up, not by a large margin as we saw the context for a year, but it's something where, if tether really starts to rise back to these levels, I would be interested in Bitcoin starting to jump back toward that 45, 50K level, depending where prices are at that point, of course. Even if Bitcoin whales aren't really jumping back up. So something to keep in mind. And I think it's really important to have a comprehensive look at whale behavior at least once a month like we just did today. So one other point I wanted to make about stable coins. Again, this chart got squashed. I'm not sure why that happened. I want to show exactly what happened with, let's do it right here, with TUSD. So this is the 6th largest stablecoin. I am going to add whale transactions that equal $100,000 or more in value. And I'm going to lock this, and I'm going to switch the price over to Bitcoin. So we can see exactly how whale transactions for true USD impact Bitcoin's price. And generally, when we see these big whale transaction spikes, they aren't exclusive to TUSD. You're seeing a little bit of similar behavior in Tether, in DAI, in USDC, BUSD. A lot of the other top stable coins out there see similar spikes at the same time that all collectively impact where Bitcoin and the rest of crypto is going. So we can see the largest spike on this chart actually happened back on April 11th. Let me full screen this, make it a little easier. So April 11th, we had a spike of 76 TUSD transactions that equaled $100,000 or more. This marked a then price bottom. It was short-lived, of course, but it kept on moving up overall until we hit another big spike that just happened here. This was yesterday, and prices immediately began declining. This isn't always going to be what we see, but the larger the spike, the more confidence that spike will have in moving the price in the opposite direction. These are essentially shifters in the market price direction. As we can see here, they really spiked a lot as prices were bottoming out here, and they kind of continued. There were a ton of whale transactions that were going on, basically beginning around the Russia-Ukraine war announcement that happened on the 23rd and 24th of February. And then things began to settle down here. But I think it's important to take a look at stablecoin whale transactions as well, and have some understanding that these are going to shift the markets arguably as much as the Bitcoin and Ethereum whale transactions do. And looking at the Ethereum, Bitcoin and Ethereum whale transactions, we see that there really hasn't been as much going on. It's mostly just been a decline in whale behavior, which would make sense as we just looked at the overall whale supply that was held by whales going down. The amount of transactions is also going down. So again, not a great sign there. We would prefer to see a lot of circulation happening from these top holders, which help keep the markets afloat and often pump them as well. You know, there really aren't too many isolated spikes that I can look at and say this changed the direction of Bitcoin. We can switch it to something like 24 hours and get a little more of an understanding. So like this one, for example, this one stood out from the crowd at the time as being a big whale transaction count spike. There were 18,393 whale transactions that happened at this time, a whole lot more than true USD, as you would expect with Bitcoin being a much more active coin. This happened essentially right near the bottom, about a day before. So you would have had about 24 hours, maybe a little less, to react to this spike and say, okay, there's a lot of Bitcoin whales and $100,000 plus transactions taking place here. I would guess that a bottom is imminent, considering it's happening as the price is free falling here. You know, another one to look at would be the largest whale transaction spike over the last 6 months, which happened a day before the all-time high occurred. 22,402 whale transactions occurred on November 9th. The price top occurred the very next day, and then boom, free fall. We had one more here, and then another free fall. this would be a good sign that a local top was forming, and indeed that's what happened, as prices have declined essentially ever since then. So it won't always be that perfect, but generally speaking, if you see a big spike stand out from the crowd on the whale transaction side for Bitcoin, it's generally a sign that markets are on the verge of moving in the opposite direction, assuming there is a clear picture of what direction the markets are going. Sometimes it'll happen while prices are flat, and that might get a little more complex. I think there's a better chance of markets rising when you see a flat price movement followed by a big whale transaction spike, but not investment advice by any means. And that needs to be studied a lot more. That's just anecdotal based on what I've seen. On the Ethereum side, we have seen a few interesting spikes as well. They do stand out a little more than Bitcoin. Generally, the smaller the market cap of an asset is, the more you'll see major standout spikes like the whale transaction spikes here, because fewer whales can have a larger say in making an impact on the network, right? It only makes sense. So we see a very similar spike that happened here in late January. Just like Bitcoin, prices were near bottoms here when they occurred, and sure enough, big rise right thereafter. Another one right here on February 24th. This was as the war announcement was breaking. And then we see, this one here, which was actually a short-lived bottom. It occurred on a day when prices were free falling, and indeed prices did rise back up, but it was very short-lived, of course, because Bitcoin was in the process of having a big decline itself and pulling down the rest of the markets along with it. So I just wanted to do a little extra on whales today. I think it's important to take a look at not only Bitcoin and Ethereum, but how stablecoin whales are behaving and how they impact prices. That said, we're at about 25 after the hour, and I wanted to make sure to give ample time to look at the state of the markets in general, especially Bitcoin here. Oh, one other thing on Ethereum, guys, before. We had some interesting network behavior in terms of a few big daily active address spikes. These occurred as prices were rising, and it did appear that these were correlating with some heavier whale activity. So this told me that there was likely going to be a correction taking place, and sure enough, about a day after, the correction has at least begun. We can't predict whether it's going to continue, but generally these isolated spikes in daily active addresses for especially altcoins. Ethereum arguably is not an altcoin. It's in between Bitcoin and altcoins. But if you see them, it's again kind of a price direction shift indicator. And we saw a few big ones that were month highs here. And then on top of that, we've seen social volume and dominance, volume being the overall amount of mentions, and dominance being the percentage of mentions compared to the other top 100 market cap assets. They were really beginning to explode as well. And this is essentially a 2-month high that we're on right now for volume and dominance. And we saw that on the screener side, volume is up about 40% for Ethereum, I think a little over 40%. So there are a lot of people paying attention to it right now. Crowd discovery can make a major impact. That said, Ethereum's been pretty flat for the last couple of weeks, so it could mean a price direction mover in either way, based on not a lot of movement here. Just wanted to point out that there is a lot of attention being focused on the number 2 asset. Okay, now we'll look at Bitcoin, see what's going on in terms of on-chain and social analytics today. And it's been encouraging for circulation, to say the least. We've actually seen a pretty nice uptick all the way going back to September. And here in mid-April, we're back to the highest average circulation point since we've seen since late January. So we're looking at about a 3-month high here in circulation. And if we look at our circulation model, which is our our NVT Analysis sand sheets model. You can download it if you're a Sandbase Pro member and plug in your API, see what's going on in real time. We see that we're in our 7th straight month of a semi-bullish divergence, indicating that we are getting slightly more circulation than what is needed to justify the market cap levels for Bitcoin. And as long as we stay in the yellow green or even bright green, as we were seeing for the first half of April, it looks like we're in a pretty promising spot where if markets turn, they can turn in a big way due to the fact that a lot of utility is indicative on the network. The amount of unique Bitcoin moving from address to address is quite high compared to market caps being at that 40K price level right now. So until that changes, we have to be slightly optimistic about the long-term prospects of Bitcoin, even if whales are, dumping. Buying power is a little bit limited for Tether and some other stablecoins. It's a great sign to see that utility is staying strong. And historically, we can see very clearly when things are red, prices become volatile, they tend to dump. When things are green, they tend to rise. Look at what happened as soon as it turned green back in October, right? This is October 2020, by the way, not 2021. We really saw that huge bull run that really didn't stop all the way until we were about a month and a half into this red cycle here. And then once we were red, that's when the drop and the pain began. But you can see here in the previous red cycles, this one isn't the best indication. We did actually manage to slightly rise during it, which is rare because in this larger red stretch, prices declined. In this larger red stretch, prices clearly declined. And then in this bright green, that's when prices exploded. This was way back in mid-2017. So this model is fairly accurate on the long term, given enough time for things to play out. And right now, we're showing that semi-bullishness continues to be the dominant trend here. So keep that in mind. On the Ethereum side, really quickly, not looking nearly as good. We're actually in our 3rd straight month of a bearish indicator, meaning we're not getting enough circulation compared to average. Going back to this, basically calculates all of the circulation that has happened since the beginning of Ethereum back in 2015 and shows whether we're getting an excessive amount or not enough. Right now, the answer is not enough. And the last time we really had a long stretch of red was way back in July 2019 when prices were, the good old days, under $220 and actually dropped below 130 at one point. This was only 2 years ago, so it's crazy to say. But yeah, when we're seeing big red bars like this, prices tend to go down. Large stretches of green, prices tend to go up. It's very evident on Ethereum, just like it is on Bitcoin. So keep in mind that we're in a bit of treacherous waters on the NVT chart for Ethereum, but with Bitcoin looking better, anything can happen. And all of these other assets are going to cede to an extent to what Bitcoin is looking like. All right, so that's circulation. Let's take a look at daily active addresses here. It's mostly been underwhelming. This is not as optimistic as circulation, to say the least. We're looking at a 3-year macro perspective, and I think it's actually a good perspective to look at right here. The big drop-off occurred in early May. This was about a little under a month after the then all-time high that occurred in April, and daily active addresses really haven't recovered ever since then. At that point, average daily active address days was maybe 1.10 to 1.12. The highest in the last 3 years, we had a day where it was at 1.36 million. This was just a few days after the then all-time high. And then daily active addresses really started to plummet, got below 800K for a few days. The average was about 797 at this point, and it has recovered here. It peaked more recently right above a million. It looks like the average day was maybe 980K, and now it's dropping a little bit. The average daily active address day is around 927K. Arbitrarily, we like that 1 million or more number. That generally is a point in which markets thrive, at least for now. So if we start to see those kind of spikes again in a long progression, not just one isolated spike, it's going to be a good sign that prices are going to start turning around due to more unique addresses interacting on the Bitcoin network. So that covers the utility side of Bitcoin. Now let's take a look at average trading returns and see what we can find here. Generally speaking, if MVRV is above 0%, that is a sign that prices are, or trader returns are a little above where they should be, and prices are at higher risk to correct. If it's below 0%, they are at a higher chance of causing the price to bounce. And right now, the MVRV is sitting at about -9%. That's a good sign. It's really actually plummeted a lot in just the last 3 weeks or so, 4 weeks. And with it now being negative, if you were to add on to your Bitcoin position, start a Bitcoin position, you're doing so at a less risky time than usual. And historically speaking, the lower this MVRV gets, the more likely a large bounce will occur. We see plenty of times where it actually goes below this -15% marker, which is actually right there. And when it does, that is almost always a sure sign that there's going to be a price bounce. And sometimes it'll be short-lived, sometimes it'll be the beginning of a bull run, like we saw back here. But all things considered, we can be pretty happy with the 30-day MVRV being at -9%. It means the traders are in quite a bit of pain. And through everyone's behavior over the last 30 days, you can buy in at a better bargain than average based on this. Now, we also have an MVRV model, which shows multiple timeframes all together, combining 1 day, 7 day, 30 day, 90 day, 180 day, and 365 day MVRVs, blend them all together, and we can see how much of a bullish or bearish divergence, not just Bitcoin, but many assets are seeing right now. It's of course going to do a refresh, but right before it did, I saw that Bitcoin was looking mostly neutral, if not just slightly bullish. That's because the longer term, like the 1 year divergence, still looks pretty good, while something like the 7 day is mostly neutral. There are still a few time frames where Bitcoin's trading returns are positive, so it's mostly neutral, while many of the altcoins have been absolutely hammered. Even in the last year, a lot of them are down. Therefore, many of them are forming either a semi-bullish or a bullish divergence, meaning that at least for now, altcoins look to be a pretty good bet, but a lot of that is going to be contingent on Bitcoin staying afloat, of course. If it does, alts can thrive from here, especially with the 1 day and 7 day MVRVs not looking so great for a lot of them. Let's see if it can refresh really quick. But for those of you with Sandbase Pro, if you want access to this, we have this link available on our Academy, and you can simply go to File, make a copy, so you'll have your own version and you're not plugging into the main version. And then you'll just want to add your Sandsheets extension here. You'll be able to plug in your API key, which you can find in your avatar on Sandbase, and give it a refresh, sometimes 2 refreshes. It can be a bit finicky at times, but once you're in and it's working, which is great. You can see that it has probably like a 3-minute load time on it. And I'm not going to just wait and sit for all of them to load, but you can see that most of these are showing as semi-underbought as they're popping up here. So that's sort of proving what I was saying. There's Binance being a neutral, Engine being semi-underbought. Ethereum is essentially neutral as well. So this can be a really nice resource for you to make some trading decisions based on how other average traders are performing themselves, buying when there's blood in the streets, selling when there's euphoria everywhere you look, and Lambo and rocket emojis going on. So that's a little update on MVRV. You can see it's all pretty much refreshed now, and the vast majority are sitting in mild positive territory. None are above this green threshold. This would be that extreme zone where it's almost always a great bargain to buy. And this would be the extreme sell zone where it's almost always a good idea to start taking profit. And pretty much everything is in better than average territory right now. Okay, let's take a look at weighted sentiment. This is the 3-year perspective. Let's look at 1 year, make it a little easier. We're looking at 1 week at a time. I wouldn't put too much into this right now because it's an incomplete week. And I don't know if it's accurate or not, but we can see that right before that new week started today, we had a mild positive uptick, which was actually the first time we saw a slightly positive bias since mid-February. So we're looking at a little over 2 months of negative bias toward Bitcoin, even as prices were rising. People were really doubting this a lot. And it's interesting because the doubt was actually correct. And prices were, basically free falling after it hit a local top a little above 48K back in late March. And typically this isn't always the case. We see in a lot of cases, if there's a long stretch of negative sentiment, that's when prices tend to rise a lot. And on the other end of the spectrum, when you see a lot of euphoria like this is a better example, especially extreme positive spikes. That's when prices tend to correct, as we saw, back in mid-October, and then again about a week after the all-time high occurred, as everyone thought, just on this mini drop right here, that it was just a small bounce that everyone could buy the dip on, and they were sadly mistaken, and there was a huge drop. So on the weighted sentiment side, it's looking mostly neutral right now. I'll check with the team and see exactly how much credence we can put into the early week super euphoric spike that we're seeing right now. I don't know if it's true. It certainly probably has a little bit of truth to it, meaning there's some enthusiasm from the crowd that there's a dip buy opportunity going on right now. But considering the crowd is this excited about a small dip buy opportunity, that would tell me that you want to be careful because the crowd is typically wrong, especially if it's a huge spike like this, if it's legitimate. All right, supply and exchanges is looking pretty good right now. We've covered it in previous calls. I won't spend too much time. It's been basically a continued drop ever since going back to mid-May of last year. And until we start to see a consistent rise, this is going to be a good sign for Bitcoin because it means there is less and less risk of future massive sell-offs that can occur on exchanges, especially now that supply looks like it's actually dropped below 10% for the first time in, I think it was either 2018 or 2019, the last time we had that huge rise up. Yeah, 2018 was the last time we were below 10%. So that's a pretty big milestone. I might post about that today on our Twitter. Okay, we already covered whales, exchange flow, zoom in, see if there's anything going on. Not too much in particular happening there. Network realized profit loss. We did see an interesting spike here. This was essentially a huge profit spike on the Bitcoin network, which essentially said that there was an excessive amount of profit being taken. And it happened as the price was rising back toward, it actually got above 42K here. And right afterwards, we had that big correction. So that would have been some nice alpha to see. You see in many of the largest spikes here, especially back here, the big spikes happen and a correction will occur right after. The largest one here, this one had a correction occur right after. And then look for the negative spikes as indications that prices could rise, because that means losses are being recorded on the network in large doses, and prices tend to bounce to counteract those losses because it's a zero-sum game, just like we see with MVRV. prices tend to rise if there's an excessive amount of loss happening. And that's what happened there as well. We'll skip development activity, not much to say. Social dominance, fairly neutral, sitting at around 15% now. We'd like to see that get above 20%. I think that's a good arbitrary number that tends to indicate that traders are focusing on the number one asset at a healthy rate. Age consumed. Again, there was a little spike that occurred around the same time as that network realized profit loss spike happened, and there was a correction thereafter. So that would have been some decent alpha. And then let me switch. Let me switch to my other template to look at the ratio of on-chain profit versus loss. I have this, which will actually show when it goes into the negative. So I just switched the axis here. Bitcoin is here in blue and Ethereum is in yellow. We'll start with Bitcoin. Let me full screen it. So the ratio of transaction volume in profit to loss tells us when there is a large amount of volume happening, similar to network realized profit loss, but on the volume side, either in profit or at a loss. And the day yesterday actually showed that we were seeing a lot of volume and transactions happening while their Bitcoin was at a lower price than when they entered that wallet. And that would be a good sign. Generally, when we see these negative spikes, prices will historically rise. And when we see these big positive spikes, as we saw clearly here on April 10th, that's when prices tend to drop. So we did see a few big, not big, but mid-sized Bitcoin profit spikes here on the 17th and 19th, it looks like. And then once we topped, we actually saw a negative one. That said, there haven't been any extreme spikes. So I'd like to wait and see on this until things become a little more clear. But for now, it looks to be a better sign than average, considering the latest day had a mild capitulation spike, if you will, for Bitcoin on this particular metric. And then take a look at Ethereum. Ethereum really topped out. Let me get rid of Bitcoin here, and I'm going to switch the price to Ethereum to make it a little more clear. There we go. So Ethereum had this big transaction in profit spike here. And this occurred right before it topped out at I think it actually got close to 3,200, might have been above it, I don't remember, but prices did correct right afterwards. You can see on the really big spikes, it's very evident that on the transaction in profit days, the really big ones, that's when corrections occur here. Another one, given a 1 or 2 day delay, it occurred here, especially when they occur in big bunches, guys. You know, this did occur. These all basically had short-term declines after the spikes happened. This was like the true all-time high that occurred. One final hurrah happened right here with a big profit take spike, and then boom, a big free fall. And it wasn't until we really saw, you know, bunches of loss spikes happen here that bottom indicators began to occur. So in general, I think this is a really, really good indication of tops and bottoms, and it might be right up there with MVRV if you want to use the two in tandem. And you see a day where like MVRV is down a lot, plus there's a lot of transaction volume in loss spikes going on. That's a nice sign that prices might have a bounce upcoming. All right, we are sitting at about 50 minutes after the hour. I think it's a perfect time to start getting into some altcoin questions. Balresh, maybe we can start off with one of the suggestions that were given to us on Twitter here. For those of you who follow our Twitter, we put up a post yesterday asking, I don't remember where I put it, but we asked what assets people wanted to see us analyze. So if you had one that you saw
I think we should
mentioned
be starting
frequently,
with
go ahead.
protocol.
Is that GET?
Yes, that's GET.
Got it. Okay, so Get is indeed an ERC20, so we'll have plenty of metrics on it. Let's zoom into 3 months, see if there's anything going on with circulation. Man, we had a huge circulation spike back on February 14th that happened to be at a local bottom there, which is interesting. Generally for smaller altcoins, like Get is being the 713th ranked market cap asset, they tend to indicate price direction changes, just like many of our other metrics do. We get rid of that large spike so we don't have the axis skewed. Yeah, other than a few occasional spikes, it's been relatively dormant. We had some extra circulation going on between the 18th and 20th, and that actually preceded a mild correction, but not much to say on the Get circulation side of things. So I'll move right on past that. In terms of daily active addresses, also not much to say. It's been mostly up and down. Most of these daily active address spikes seem to occur near local tops, other than this one, which was a bottom. So they'll occasionally, or for the most part, actually, they'll happen as prices either rise or drop, and then a price direction will happen for at least the next few days. Here there was a drop, here there was a drop, here there was a mild drop, and then here there was actually a slight rise for a few days thereafter. So there's some alpha here on the daily active address side that you guys can take a look at for smaller assets like Get. We might have MVRV, but we don't have it for intraday. Let me check out 30-day MVRV without the intraday. Perfect. Okay, so I'm going to mark the plus 15% and negative 15% spots. There we go. So when things get above that danger zone, that tends to be when things top, as we saw pretty perfectly right here. And then when things get below that negative 15% mark, that's when things tend to rise, as we saw here. Right now, we're in a pretty neutral state, but it is on the negative side, which means there's less risk in jumping into Get right now compared to the historical average time, sitting at about negative 5% right now for the 30-day MVRV. So promising sign there. On the weighted sentiment side, we're seeing quite a bit of positivity, actually. Let me zoom out. Okay, so whatever fundamental events were going on back around the all-time high levels for a lot of assets back in mid-November, Get was not near all-time highs here, but it had a huge euphoric spike here where it was seeing a standard deviation of almost plus 5 above where it normally sits for sentiment. And as sentiment usually indicates, when things get euphoric, prices move down, and that's exactly what happened here. Now, call it what you will, this could have happened due to, all of crypto retracing around here anyways. But we do see that, when things started to get super negative, that's when prices began to rise. Again, though, this was related to the entire crypto markets beginning to rise here in late February after a few days passed from the war news and prices began to recover. So on the weighted sentiment side, I think there is a little bit of alpha here considering the extreme shifts of Get's price on the extreme weighted sentiment spikes. And right now, we are seeing, 1.5 is still a pretty big positive standard deviation. It may not look like it because of this spike, but 1.5 is a lot. So we're seeing a little bit of euphoria. I'd be a little concerned about that, and Get would have a better chance of declining based on weighted sentiment being this positive right now. Supply and exchanges is an interesting story. We're seeing that it peaked above 7% back in late August, early September. And it's been dropping pretty steadily ever since, down to about 4.8% now. That's a good sign. There's a very, very small amount of Get sitting on exchanges at this time. I don't know how long this asset has existed, but it looks like it's at least 3 years old. Let me go way, way back. So it started trading at the beginning of 2018, interestingly, and the supply, as you normally see from new coins, started off going up as it was distributed onto exchanges and took its first big drop in late November 2020, and prices absolutely exploded as the supply started moving away from exchanges. So that's some nice alpha there, man. So from the point of the supply and exchanges beginning to free fall up until the local top, the price of GET went up 1,974%. So there's some definite correlation there with supply going down. And then once it moved up, this happened right before that all-time high occurred. So if we go to the peak, yeah, price is generally about even. That's funny. But generally speaking, just like any asset, you want supply to be moving down, not up, because it means there's less risk of a major sell-off happening. Let's see if there's any alpha as far as whales are concerned. I'm guessing this is going to be pretty centralized, considering what a small asset it is. Price is sitting at about 218, so I would say that the tiers to look at would be the 100,000 to 10 million coin tiers, and they hold currently about 65% of the supply, and they've been relatively flat. Interesting to see. Usually there's quite a bit of fluctuation, but this supply tier has been flat for about a year now, after a huge jump up here, going from 42, 41, all the way to 65, where it's been hovering right around ever since. So really not much alpha I can point to on the whale side if it's completely flat like it is. I'm curious what the top one looks like. Yeah, so it looks like right when it had that big drop, oh wow. So there was probably just one or two addresses that were holding 10 million or more GET, and they dumped to either a lower tier or they dumped completely right around the local top or the all-time high that occurred last year. And when they did, the price dropped off a cliff. That's quite interesting to see. I mean, it's clear that they didn't dump completely. They just moved down to the lower level of like the 1 million to 10 million coin tier, because the pink line jumped up as the red line jumped down. But that said, I am fascinated by the fact that it's been staying at 65% for much of the past year here. Maybe looking at the next tiers down, like the sharks, it looks like the 10K to 100K one is moving up a little bit, and they hold a pretty nice size of the supply, 21% all the way to 22%. It's not much there over the past year. The blue line, 100 to 1,000, is moving down. I don't have much alpha I can share here on the whale side, but it is interesting to see the big pattern. If you ever see like a 10 million to infinity coin address start to pop up again, that would probably be a good sign, considering the prices dropped off a cliff after the only tiers that qualified for that ceased to exist right at that all-time high. Exchange flow, let's zoom in here a little bit. Okay, so there is some good alpha on the exchange flow side. We did see that, especially on the inflow side, the last big spike that occurred on April 3rd correlated with the local top, and prices did drop right afterwards. It's relatively dormant ever since though, so not much to report on now. Network realized profit loss, not much to report on here. No development activity metrics for GET at this time. Hopefully we can change that in the future. Social volume and dominance, there was a bit of an uptick here. I don't know if those percentages are right. 21% related to GET. I don't believe that's true, but ignore the percentages and just focus on the trends. Social volume does appear to be going in the right direction, and there's an increased discovery for GET, and it's happening pretty gradually. It's not just a bunch of isolated spikes. So it's good that this asset is getting more attention right now. I'm not entirely sure why, as prices are declining, as social volume is increasing. But for those of you who suggested GET, whether it was a couple of you or just one person, you may know more than me as to why this is. Generally, I'd call this a slightly good sign, though, if social volume is steadily rising as it is. Age consumed, not much to say. Let's zoom in here and look at the last month of transaction volume and profit to loss. So let's mark the 1% line, or 1-to-1 ratio line, I should say. Anything above this line means that the ratio is skewed toward profit taking, and anything below means it's skewed toward losses being taken. And the last couple days, it looks promising. This spike is very interesting. Just yesterday, there were 5 times as many transactions taken at a loss as there were in profit. So that would be a good sign that some capitulation is happening. We can see the lowest spikes here. These occurred right at the bottom. And the highest spike, actually, interestingly, was not nearly, it was about a day off, I guess I would say. But this wasn't very good alpha here. So I don't love the mislead of this spike here. It makes me have less confidence in the profit-taking spikes. But these two were pretty good, right? These marked the local tops pretty well. And these definitely marked the local bottom pretty well. When we see the transaction ratio well into the loss side of things, that definitely seems to be when price bounces occur. So I think there's some good alpha on this metric if you guys want to keep track of the ratio of daily on-chain transaction volume and profit to loss for GET. And then whale transaction count, there's very few transactions that are sized above $100,000. So probably not much I can say other than the market cap has to grow for this metric to be more relevant. All right, so that's GET. Why don't we take a look at 1 or 2 more, Balresh?
I think next in line would be XRP or Polkadot, but there we can only look at the social data, I think.
Yeah, let's do XRP. We've got a bias toward it because we have mostly full metrics on that, and we don't for DOT. Okay, circulation is mostly moving down. Let me zoom out a little. Yeah, not much on the circulation end. Pretty steady at about 330 to 380,000 XRP moving per day. Daily active addresses, though, they've really fallen off rapidly. So they peaked. Interestingly, they were peaking as price bottoms were occurring. So that's a nice bullish divergence that we were seeing back in late January. This would be a great lesson for calling bottoms, considering how high they were as prices were declining. And then once things rose, the daily active addresses started dropping off, interestingly, and they've dropped off ever since. Overall, as daily active addresses have gradually fallen, this would be a bearish sign because there's not as much unique interaction between address to address on the XRP network. MVRV side, weird that there's some extra lines popping up here. Let me get rid of those. So we'll mark plus 15 and negative 15% here. That's about right. Okay. So MVRV, just like most assets right now, we're seeing it sit about negative 8%. Most are between negative 5 to negative 10% on the 30-day scale right now. And so XRP is smack dab right in the middle of that. We do see some good alpha, though, if the MVRV drops below this negative 15% line. Pretty good time to scoop it up historically. And then if things go above, it's a pretty good time to begin taking profit, as we clearly saw in early February. Not much to say other than we are at a lower risk than usual for XRP right now. Weighted sentiment is neutral. Not much to say there. We don't have supply and exchanges for XRP right now. I'm going to skip Whales because XRP can be pretty misleading. It's a much more centralized top cap asset than most out there, so it can skew data quite a bit. We do see a big spike in network realized profit loss happening right now. it is on the positive side, which is not a good sign. It's interesting that it's happening as prices are falling. Usually you'll see these happen, as prices are high, and that will indicate a correction is occurring. But not a good sign considering there's some profit taking happening even with prices this low. I'd be a bit concerned about that. Development activity is starting to rise a little bit, but there isn't a ton overall. You can see on the top left of my screen, there's about, looks like about 4 per day, 4 to 5 submissions on their GitHub per day. Not very much, so XRP is a pretty small developed asset compared to a lot of the top cap assets out there. Social volume and dominance, things have really come back down to earth. We were seeing a ton of discussion related to XRP at the beginning of this month, the first week or two, and then they quickly fell off. Get rid of social volume, make it a little easier to see. So typically when we see social dominance rise like this, it's happening as prices are rising, but that wasn't the case here. It actually rose as things were dropping, and it didn't really have much of an impact on the price. And it doesn't look like that crowd is too much into XRP anymore, as it's dormant once again and not being discussed. So if things do pick up, like we did see here briefly, like this would be a local top indicator because it happened as prices were really beginning to rise. I don't know if it was decoupling, XRP was decoupling from the rest of the markets here, but if it was, that would be a good sign that the crowd is getting too euphoric toward the asset and a local top will form. Age consumed, just like network realized profit loss, there is a spike going on and it's happening as prices are moving down. Not much to say other than, it usually will happen as prices rise and it'll be a nice top indicator. But sometimes, if it's happening as prices decline, it can actually be a nice bottom indicator here. So I'd put a little bit of optimism into this metric here right now. And then we're also seeing a huge spike in profit taking, which is not a good sign. We're seeing about 4 times the amount of transactions happening in profit compared to transactions happening at a loss. The break-even ratio would be right here. And anything above it is profit taking, anything below it is loss. If there are any bottom indicators, yeah, if anything, it would be like right here, but it doesn't look like they made much of a difference. A little bit there, that would be some decent alpha here as well, bottom indicator. But overall, yeah, not a good sign that we're seeing a huge profit day happening, especially as the price is already declining. It means the people that might have had XRP in their wallets long-term from way back here or even last year, they're taking profit before they go into a loss here, it seems. So unless this bar starts to come down throughout the day, I'd be a bit concerned with this one as well. Overall, not a lot of good signs for XRP. They look to be more bearish than bullish right now. Never investment advice, of course, but historically speaking, the metrics don't appear to be favorable for XRP at the moment. All right, Balresh, why don't we do another one?
Do you want to give the social data for Polkadot a look?
Let's do it. Okay, so as most of you know, we don't have on-chain data for Polkadot, but we do have weighted sentiment, social volume, dominance, things like that. Let's take a look at weighted sentiment and see what's been going on here. We had a long stretch here from mid-December all the way up until late March where the bias toward DOT was negative. That would indicate that it's a less risky time to get into the asset due to the amount of FUD and negative bias toward the asset. That said, after a little bit of a rise that occurred here in late March, just like the rest of the markets, Polkadot has fallen, and it appears that people are thinking there's a bit of a dip to buy now. It's not an extreme one, so I don't think this is anything concerning that would work against the asset. But considering there's a bit of a positive bias now after such a long stretch where they were negative, I'd be a little concerned that there's a little bit of crowd discovery on the dip happening for DOT that would work against the chances of an actual bounce occurring. Where do I have my social volume and dominance? It's down here more.
We also had mentions in chat of Curve and Ohm, in case you want to give something else a look.
Gotcha. Let me just take a look at January 1st until now for dominance, see if there's anything there. Yeah, it's been mostly a decline in DOT's social dominance ever since things, a few days before things topped out here at about $28. We're now down to $18. And it looks like about 0.3 to 0.4% of discussions within the top 100 assets in crypto are related to Polkadot right now. So it's been pretty dormant here. It does look like when things were bottoming out, that's when prices really began to rise. But that was a lot of assets here, so I wouldn't put too much credence into that. Not really much to say about Polkadot, unfortunately, right now, folks. I'm sorry we don't have more metrics on it. But as far as weighted sentiment and social dominance go, pretty much neutral at the moment. You said Curve, Balresh?
Yes, that would be CRV or Olympus DAO. That's
Let's take a look at Curve. I actually saw something interesting for Curve recently. I think it was a whale maybe not. Let me check really quick. Yeah, we had, so I think this is what I saw from last week. There was a huge whale transaction spike, 26 transactions in about a half an hour is massive for Curve that are above $100,000 or more. And this happened as prices were falling off. That would have been some nice alpha that things were going to bottom out and turn around, which it did. We had this one here that said that a local top might be imminent, and that's what happened. I think it's easier if we look at something a little more macro, though. Let's look at 4 hours. Go to last 3 months. Okay, so that makes a little more sense. I saw a very recent one here. It looks like the second largest whale transaction spike happening right now, at least for the last 2 months or so, maybe 3 months or so. And it's happening as prices were briefly rising. So this would be a bit of a concern, in my opinion, because of the fact that whales are active as prices are rising. It means there's a greater chance they're profit taking than they are accumulating. So I'd be a bit hesitant to get into Curve until this whale transaction count bar becomes a little more clear. We saw that they happen in bunches back here at this local top. This one happened and prices kept rising for another day or so before dropping off, but still I think that was pretty good alpha. This one happened as prices dropped, and sure enough, prices rose. So you can see that when whale transaction count spikes here, it can be some nice alpha. I'm curious how the 1 million or more whales look for this one. Here we go. So this is the 1 million or more whale transaction count. Not really. I think it's probably a little too skewed here. Maybe if I go to like 1 day. Yeah, not really much alpha. I was hoping there might be a few huge spikes here that correlated at tops and bottoms, but it seems pretty random. Maybe a few. I mean, we see like some of the biggest bunches occur at local tops, but yeah, stick to the 100K plus for this one, and I think you'll find some pretty good signals there. Besides that, let's start from the bottom here while we're down here. Go down to 1. Sorry, 1 would be right there. Okay, so anything above this line would be transactions taken in profit. Anything below is transactions taken at a loss. Today, we're seeing that there's some loss transactions taking place, so that's a good sign. That said, it's still a partial data day. So wait for the day to be over and see if it stays below 1. That would be a good sign of some capitulation happening. But keep in mind that there were 3 straight days of profit taking happening, especially this one being a pretty big spike. They did happen right before a small correction took place. The bigger ones happened here on the rise, a lot of profit taking happening. This foreshadowed a large drop happening, which it did. This one happened perfectly at a local top. These two happened perfectly at that local top. This one was a perfect local top. This one, a little muddled, but you can see that a correction did occur before it dropped below 1 and then it bounced again. So really nice alpha here. I think this is a good metric to look at for Curve. All right, circulation, we are seeing a big uptick today. This probably correlates with the uptick in whale transactions. 13.6 million tokens moving on the network is the highest we've seen in about a month and a half, March 7th being the last time it was this high. It doesn't always have an immediate impact on the price though. Keep in mind, this is more of a long-term indicator, and we really should be looking at this 30-day trend line more than anything, which is still pretty low at this moment. Daily active addresses, things have really dropped down for Curve a lot. We're seeing pretty much 3-month lows right now in the amount of unique addresses interacting on the network at an average of about 946. Today's actually 739 daily active addresses. We got as high as about double that, 1488. And back 3 months ago, the 30-day trend line saw about 1,350 daily active addresses a day on average. So we've really come back down, being 946. That's, I don't know, maybe a third less daily active addresses than we were seeing 3 months ago. Not a great sign there for Curve. MVRV, pretty much neutral, slightly on the opportunity zone side, sitting at about -5%. Not much to say there. Just like most of the altcoins, there's a mild opportunity forming. Weighted sentiment, we were seeing a slight positive bias, and we're now very mildly in negative, but this is essentially neutral. Supply and exchanges is moving down. That's great to see. Looking at the long-term trend, yeah, Curve has really been moving off of exchanges quickly. It got down to 5.5% on March 5th before rising again, and now it's challenging that, probably an all-time low, I would guess. Let's go back to the beginning. Okay, so yeah, other than when it first distributed coins back in 2020, we're pretty much at a de facto all-time low because the initial months don't really count. But considering things are moving down here, there's less risk of a sell-off on exchanges right now. That's a nice sign. Let's see if there's any whale alpha here for Curve. The price is 226, so let's look at, it's already highlighted, perfect. So 100,000 to 10 million coins. We are seeing a long-term rise. That's nice to see. The tier here holds about 10% now. If we look at, well, yeah, I mean, at the beginning, September 30th, they were holding less than 2%. So they've been increasing their supply. I like the look of this. The whales seem to be accumulating Curve gradually over time. That said, since November, so the last 5 months or so, there has been a mild decline. They were holding about 11.4%, and they've dropped about 1.5% during that time. So short to midterm, not looking as good, but long term, I like to see that the whales holding, anywhere between 220,000 all the way up to $22 million in Curve. They are increasing their bags long term over time. Let's see if there's anything else, and then I'm going to wrap it up with the Curve. Social dominance. Let's go to the last 6 months. Huge spike here. That was interesting to see. I'm not sure what caused it, but it quickly dropped back down. It didn't have much impact on the price. If this were to be happening on a big rise or a big fall, these kind of social dominance spikes would be more applicable because it means the crowd is having a lot of FOMO or FUD toward the asset. Transaction of ratio of daily on-chain transaction volume to profit to loss. We already touched on these. Oh no, actually we didn't. Yeah, we did. I take it back, sorry. So yeah, I think we have covered 4 good altcoins here, and we hit Bitcoin substantially, as well as a good stable coins at the beginning and some other news stories. I hope this was helpful, guys. Really appreciate those of you who tuned in here on YouTube and Twitter. Appreciate you supporting our channel and our platform in general. Make sure to let your friends know about Santiment and the fact that they can get 1 week free of Sandbase Pro to see all of the unlocked metrics in real time, just like I showed today. If you're on a free plan, you will have a 30-day delay on most of these metrics, but you'll still be able to browse through them. Sandbase Pro, if you're interested, you can head to our pricing page here, and you'll see our deals that we have. Generally, it's $49 a month on a monthly basis, or $44 a month if you get 1 year. You can get Pro or Pro Plus. We have Sandsheets models available, which you can plug your API into. All sorts of great things at your disposal. So thank you so much for those of you who are continuing to support Santiment. Check out our Discord. You'll see the link in our bio on Twitter, or we can leave the link here if one of our mods can do that here in our YouTube chat. That would be great. And until next time, on behalf of Maxim, our founder, and everyone else here at Santiment, we wish you all a great weekend. Stay safe, and talk to you all next week.